Hello everybody, welcome to TraderMerlin Show. It is your weekend edition. Happy Friday everybody. Cheers. Hope you had a great trading week out there. And of course, if you were bullish at, I guess at the end of the week, it was nice to have this nice rally of 1% for the S&P on Friday. But really for the most part, this week has just traversed sideways and hasn't done too much, which as we look a little bit later on, we'll kind of put it in perspective as to where we are within the overall trend. And of course, on Sunday, for those of you who like Tilly's Market Outlook, we'll, I'm sure, be going over those levels and what it means for us going forward. So again, cheers everybody. Hello, Terry, David, Dirty Kid, Ivzy, Big Ab, Brian. Good to have you guys all with us today. And Fabiano, Lomba, Piacere. Cheers to a great weekend. All right. I was like flooded with questions last night at TraderMerlin. It was kind of cool, actually. TraderMerlin.com, I got probably about 30 different messages last night with regards to questions for today's show. So I am, needless to say, going to be very bogged down in the question department today. I've got a whole bunch of them picked, and I'll go through as many as I can. And then maybe some of those have to carry over to next week. Sorry, everybody, if I don't get your question answered, but there were a lot of them on a wide variety of different topics. So thank you guys all for the feedback. For those that don't know, obviously we do the show live every day, Monday through Friday. I try to get to as many questions as I can, so if you have some, feel free to send those on in at TraderMerlin.com, or you can just simply put them down below the video on the YouTube page. I look at both of those, and I actually give priority to the ones on the YouTube page because obviously I think the search engine results are going to be better if it's on the YouTube page. That said, let's get things started. Today I'm going to start things off with our trading week. Wow, I almost sound like Tweety Bird right there. Hello, everybody. Trading week wrap up. Yes, the glass of whiskey is flowing today. First question I've got, I will go through the markets here in a little bit. I want to kind of start off with this first question because maybe you guys can help me in this front. Mountain Markets messaged on YouTube. He says, great to see the solo content and the continued great guests like Dr. Woody Johnson. Wondering if you're thinking about branching to the podcast realm on the solo front. I am actually in the podcast realm. It's just not going very well. So if any of you have expertise in that area and would like to maybe help out or give me some pointers as to what we can do to take it to the next level and get that podcast much more viewership and listeners, that obviously would be great for me because as you guys all know, this for me is a free gig. I'm doing this voluntarily for everybody simply because I love talking about the markets. But ultimately, it'd be nice to get the viewership up to a certain point where, you know what, I could get paid for doing this, and then I could really start to expand the content and guests and different things that I provide. So anybody has any thoughts on that, let me know. Right now, it's just on iTunes. You go to iTunes, look at Trader Merlin, and there you can see it. Subscribe there, leave a comment. That helps out. But I don't know. Is there something else I should be doing to help boost that one? I don't know. All right, next is that was just a quick little comment. This one's from Landis down in Singapore. Hello, Landis. Good to have you back with us. He says, what is the general guideline for stop loss for a stock which I really want to own for 10 plus years, or is it okay to have no stop loss in this case? This is just a matter of personal preference. There was an individual who used to be a regular on the Power Trading Radio show. His name was Unscammable. A great guy. He definitely had some very opinionated viewpoints and got a little confrontational sometimes, but all in all, a pretty good guy. His viewpoint was, I'll never sell. I don't care how low the markets drop. And then we were talking, the SPYs, trading at, let's say, 300, and he's like, oh, even if it dropped all the way down to 160, I wouldn't sell. And I'm thinking, that's a 140-point drop. You would let it drop all the way and still hold? That's a matter of personal preference. I can guarantee you that I'm not that guy. If this fell from 300 down to, let's say, 280, I'm probably going to jump ship and get out of that position. It's a matter of personal preferences. Now, are there rules or guidelines? Everybody will tell you a different number. Someone will say, hey, a 2% pullback is more than enough. Some will say a 10% drawdown is enough. To me, it's arbitrary to you. And I think that what you have to do is you have to experiment with markets, you have to experiment with charts and find out what is your comfort zone. One strategy that's very, very simple is just to use exactly that, a simple moving average. And I think that that's probably one of the better ways. To me, it all depends on what time frame you're looking at. So I'll bring up a chart here. This was TMO. You guys might remember this one from earlier in the week. I was looking at it as a potential short because of the shooting star on Tuesday. Just didn't happen. Did not have a follow through, so no big deal. But let's say this was something that you wanted to own for the next 10 years. Obviously buying right now is a little bit risky simply because it's, as you can tell, it's been on a parabolic move. It's just been really ballistic, not even just since March, but over the last 2 weeks. if I zoom out here, we've got a pretty clear trend. Now, there are certainly moments where you'd want to get out of this one. And if you're going to hold for 10 years, you're probably not looking at daily. You might even be looking at weekly or monthly time frames. So what do you do? My personal belief from my long-term accounts, and I don't usually hold things this long, so take that into account. I'm not the type of person to hold something for 10 years. If I wanted to, I could slap on, say, moving averages here and simply use that as my trigger and say, okay, here's a weekly, and maybe I want to do it where let's say we put on a 20-period moving average, right? And I'm just using this as an example. I would recommend maybe back testing or tweaking your system to figure out what number is going to work best. So here is, what do I got here? I think that's a 20 and a 50. Oh, that's a 50 and a 200. Okay, so let's put on a 20 and a 50. You guys could use, again, different ones. But if you, let's say, use that 20-period moving average as your trigger to get in and out on a weekly, you'd be in for most of the ride, but there's a lot of times that you would be stopped out. As you can see here, if we use the blue line, which is your 50-period moving average, there's really only a couple of situations where it would have gotten you out since 2017. Right? It really has just been rallying up, staying up above it, trending strong. And you can see right here at the beginning or end of 2018, when we had that big sell-off in December, yeah, it would have taken you out and then it ripped right back up. And unfortunately, you would have been stopped out. But of course, you could also use different tools like moving averages to get back in. This case back here in 2020, where it really ripped down, that would have given the opportunity to potentially be selling puts and buying whatever security, in this case TMO, at a much lower price. I think that moving averages for the long-term investments are a very simple, easy way to do it because you can simply set alerts and say if price crosses that 20-period moving average, then there you go. That's what I would be doing. It's your sensitivity and how often or how frequently you want to be making these adjustments or changes. As you can see on that chart, if you are using that 20-period moving average, you're going to be stopped out a lot, right? If you're holding for the long term. The longer moving average period you're using, the less sensitive you're going to be to these wild swings. I mean, look, if we put that 200 back on there, let me just add on the 200 as opposed to the 20, you guys can see that you wouldn't have been stopped out at all. You would still be in it. And this is what a lot of institutions are using, right? That's really the way that things are designed. I mean, these institutions are using these longer term moving averages because they're less likely to be bumped out of the market. It takes a long time for this thing to get down below a 200-period moving average. So, what I would do, and this is an interesting one, you could actually, we had this lesson a while back on the show where we talked about moving averages for one of the viewers, and we were tweaking this to fit the chart. So you notice if I put 70 on here, what I'm trying to do is get it so I don't get any weekly closes below this blue line here. And I just changed it to a 70-week moving average, and you can see that really is in that same period of time since 2017, it has not closed below, except for what happened here in 2020. That's great because that would basically keep you in this trade even longer, Landis, and that is just one of the resources that I would use for that. Other than that, you could use manual stop losses, but then you have to monitor your securities all the time. You always have to be checking and moving those stop losses up. Trailing stops, I don't even think would work that well because if you get a wild swing, let's say it shoots up 10% and then drops 10%, well, your trailing stop is going to take you out right away, most likely. Whereas that moving average is going to take some time to adjust and it won't take you out. So I'm a big fan of using moving average for the long-term investment perspective. Of course, along with that, and this really goes back to Strategic Investor, which is the class I just finished building the on-demand version for Online Trading Academy. Very excited about that. The Strategic Investor class focuses on that, but in conjunction with multiple things. Because let's say you decided to hold TMO. You bought it and you wanted to hold it for the next decade. Great. I can't say that's a bad idea. I can't say it's a good idea. It's up to you, but let's say it's a great idea because it's trending strong. And let's say, I'm being very hypothetical here, let's say over the next 10 years, it averages maybe 6% year gain just in the appreciation of the share price, and then you add in yields and dividends and things like that, maybe you're getting even higher. But during that 10-year period of time where it's appreciating, let's say 6% a year, I could be implementing option strategies and adding on an extra 1, 2, 3, 4, 5 or higher percentage by using option strategies. Even though I'm still holding the underlier, I can now use options and generate an even greater rate of return. And to me, that's where it separates kind of the typical long-term investor, somebody who really takes this as a profession, is using those long-term holds. You want to hold it for 10 years, great, but let's add on an option strategy so now I can increase that rate of return. this is something I do in my long-term accounts where I will be selling options, and if I'm trying to get an extra 1% per month on the positions that I'll be holding, if I can get that, great. At the end of the year, if the markets even just go sideways and that security doesn't do anything, if I get a 1% per month extra because of the option sales, I made 12% that year. So the market did nothing and I made 12%. Now combine that with something that's trending strong, that's where the power of compounding and time and duration really start to have a big impact. There you go, Landis. That's my take on it. What did I miss? GD says, Merlin, I'm hearing a lot of chatter about the coming collapse of money and the currency reset. Can you please do a show about this? I think I'll do that with, I'm experimenting with the idea of having like kind of a panel discussion. There's a lot of traders from a lot of different schools, or have gone on to different schools, as you guys know. It's kind of funny. This program that I'm doing here at TraderMerlin, I'm bringing on a lot of my friends that I've known over the years and people that I really trust and think are good people. Obviously, there's certain people I will never have on the show because I don't trust them and I think that they're scum. But a lot of those individuals who I think have gone off to do their own things, we'll see what happens in the near future. My guess is you'll probably see them back with Online Trading Academy, just because it's really hard to run a business in the trading space by yourself. And it's really hard to beat the family and organization structure you have at Online Trading Academy. So looking forward to getting that back on track. I'll see, GD, if I can do that show. I'd like to get a bunch of different people's perspectives. We did a show on Power Trading Radio years ago when Brexit first happened in 2016, which I thought was great. And it's nice to have different people's viewpoints, because I agree with you. There is an issue with the fiat money system. And I think what really brought it to light is the introductions of cryptocurrencies, right? Those cryptocurrencies have changed the discussion about what money should be. And it's not necessarily that US dollar is going to crash and disappear. It will morph into something else, because clearly the Treasury has a monopoly on the US dollar, and who wants to give up a monopoly? Certainly not the Treasury. So, we'll have to do that in the future. It could be a financial reset. I'm just dumbfounded by the way this market has been moving, I'll tell you that. All right, let me go to more listener questions. I want to make sure I get to as many of these as possible on today's show. So Landis down in Singapore, that's what I would do. The last piece there, you say, is it okay to have no stop loss in this case? Personally, I would say you should always have a stop loss, period, especially if you're not in profit. If you're in profit, okay, let it go all the way back down, I guess, if you want. But I think our goal has to be to always manage that downside, because when markets turn, if and when they turn, you don't want to be left holding that bag. Even on this great stock that's may have been trending for years, that trend can reverse and things go right back down to the toilet, and all of a sudden you've wasted 10 years of investment. To me, let's have stops, trails, stops, whatever you want, but make sure you always use those. All right, what's our next one? Oh boy, this is a tricky one. Oscar says, I've been adding some Chinese stocks. Can you comment on NEO, LVGO, AAJX, a whole bunch of other different ticker symbols here? I think he's saying he wants to buy and hold and place trail stops. Oh, that was, what was Robin's? Domesticated Rat just totally threw a curveball to us here. He says, what was Robin Williams like as a babysitter? It's funny. I don't remember a lot of things from my childhood. I have I was born and raised in Germany up until like 3 years old. And I remember one situation there when I choked on a piece of candy. I don't remember anything else, but I remember this. I remember I was choking. I don't know, I was probably 2, 3 years old. And all of a sudden my world was upside down because my mom literally grabbed my ankles and smacked my back so hard. And I can see it upside down, this little red piece of candy go flying out the window at the house in Germany. That's a childhood memory. The other one was Robin Williams. And what's interesting to know about Robin Williams is you think that he was just a crazy lunatic and this was all some act. No, he was nuts. This guy was absolutely... I remember as a child, I went to his girlfriend's house, whose name was Marcy, and they went out with my parents, and I was home alone with Robin Williams. Sounds like its own movie right there, doesn't it? And he used to have those rainbow suspenders from Mork and Mindy. He had that long before Mork and Mindy. That was his signature. And he put on a cowboy hat, and I remember he'd be jumping all over the furniture like a raging bull and a monkey and swinging on stuff, and he was just crazy. And then all of a sudden he'd be like, all right, we're going to do a bucking bronco contest. You have to hold on to suspenders, and he's riding around the living room and stuff. He was a great guy, a heart of gold, and just absolutely crazy. Maybe that's where I get my bizarreness from. But anyway, thanks for the tangent there, Domesticated Rat. Yes, Chris, I never mentioned I never forget to mention the scumbags, and I would love to be able to mention them by name. That's really what I would love to do, but we live in an extremely litigious society, so I'm hoping that karma comes back and bites them in the ass, and everybody knows about it through their actions and what happens in the media. All right, let's go back to this question because I got dragged into a tangent here. The Chinese stock stuff. All right, obviously there are varying levels of Chinese companies. You have the ones that are strictly in China and can be hard for you to get. There's ways you can do that, and I'll show you that. Then there's the stuff that's listed on the U.S. Things like TAL, NTES. You look at NEO here. My take is a bit jaded because I just don't trust what comes out of China. Until they are held to the same standards of accounting that almost every other corporation, certainly every American company is, I just don't believe their numbers coming out of there. So if you take the level of, we call it risk on, right? Risk on is buying equities, buying into the stock market. There's risk in that alone. But you add in a Chinese stock like NEO, your risk is now significantly higher. Even though NEO is producing cars, they may be the most fantastic company, it is still based in China under communist rule. You know, there are things that NEO may be doing which we don't see because we have no regulatory ties there, just what they're reporting to us. So that makes me scared. How would I circumvent that risk? Well, Oscar, I like what you put on this list here. You have a bunch of companies here. The three that I want to focus on are ETNs, Exchange Traded Notes, and that's AAJX, KWEB, and MCHI. Those are diversified holdings. I will show you here real quick. And again, I mentioned this the other day when we looked at the electric vehicle ETFs on how a lot of those ETFs have the exact same holdings. So let me see if I can bring this up for you. Unfortunately, I didn't have this one prepared. I will do my best to not waste our time. But here's Yahoo Finance, and I will bring up a couple different symbols. So let me show you this one. We'll start with LVGO is not an ETF. We're going to start with KWEP. And I'll bring that one up. And all I'm doing is showing you the overlap. A lot of these are extremely repetitive. So I will go to KWEB. It's the Crane Trust ETF. And just click on holdings. You guys, anytime you buy an ETF, always look at the holdings. It may be stuff you don't even want. I'm scrolling down and just make a note of the companies here. You have NTES, which Oscar mentioned. You have Baidu, you have TAL Education Group, you have Baba. So you looked at that earlier and you said, I wanted to buy TAL, I wanted to buy NTES. You didn't mention Alibaba or Baidu. But now instead of buying those individual shares, you could buy this ETF, which would have, or ETN, which has those in it. I would much rather see you do that than buy the individual securities. I think that diversification is a risk mitigator here, especially when we're looking at Chinese companies. Now, if you look at that list of names there, just take into consideration the big boys, right? Alibaba, JD, Billy, TAL, Baidu, and NTES. So now let's go look at another one, which was the MCHI. And the only reason I'm doing this is to see what are the differences. You mentioned ETFs here. Notice the same stocks, NTES, Baidu, JD, and Alibaba. Okay, great. Now I'm going to go to the third one you mentioned, which is AAJX. And we will see what it is holding. AAJX. Go to holdings. I scroll down. And oh my goodness, wow, look. The number one holder on this one is Alibaba. It is a bit more diversified. It does have Tencent. That was also in some of the other ones. But to me, if you're thinking about holding long term and you want to be involved in the Asian markets, great. You've got three ETFs here. They both actually, ETNs. They both actually have a good degree of liquidity, right? That's a really big factor for me in deciding what you want to allocate your capital to. So what I did for you, Oscar, is I did a real simple step. I'm not going to go and break down NTES or these other ones simply because I feel like you want to buy diversified. So we're going to go with ETFs here. Or I keep saying ETFs. It's actually an exchange traded note, not a fund. So here's your chart. And what I did is I actually created a sector screener. And I put those three ETFs side by side. In the black, you have KWEB. In the orange, you have MCHI. And down here, I'm guessing this is yellow or light green at the bottom, is AAJX. Those are those three ETFs that you wanted us to look at. Clearly, if you want to look at buying into one of these, which one do you think would be the best to have in your portfolio? The strongest one. Now, what you got to make note of here is really since May, the KWEB, which is that black line there, has really accelerated and moved up. if you're looking at buying into China right now, I would wait for a pullback. These have had a huge move up, and I'll show you the individual charts here in a second. But clearly, KWEB is the leader here. And as we talked about with different guests on the program, when you're looking to buy into something and certainly hold it for the long term, you want to buy the lead dog. You want your strongest dog pulling the Iditarod sled race, right? You don't put the weakest one up front. In this case, you'd be looking most likely to buy KWEB. I just think right now is not the time to buy it. So let me look at a chart here of the different securities. All right, here's KWEB. Now you can see why I'm a little apprehensive on buying. This is a weekly, so it is scaled a bit differently. But really, since April, this thing has just gone parabolic. It was down in the 30s, and now it's just eclipsed 70 this week. Crazy big run there. The other ones are a little bit more muted. AAJX. Still, there gets to or AAXJ, excuse me. There you go. Actually, this looks like a good time to wait because AAXJ looks like it's about ready to come down, right? You're coming right up in this area of supply here. We could put a little box around this candle right here. All right, you're coming right up in that area of supply on AAJX. Actually hit it this week and started to sell off from it. So I would wait, maybe buy as it sells off and has a little bit of a pullback here. So there you go. There you go, Oscar. That's it. That's all I got for you. I'm not going to break down. You look at things like NEO. We've been looking at that because it's in that EV space. Just a ridiculously strong chart. If you're looking at buying into it, I would say wait for a bit of a pullback here. Even though it's been really, really strong, it probably will have some pullback. It's just caught up in this euphoria right now. NTES was another one that you mentioned. Again, giant gap up that has yet to fill. I would wait for it to come back down. Even if it got down to, let's say, 440, that might be a buy point. And again, you could be using options here to collect premium while you wait for it to drop back down to the price that you want to buy back in. So, big fan of that. Yeah, Big Eb says expense ratios matter as well. Yes, definitely. There are definitely differences. I didn't look at that real quick to see what the expense ratios are for this, so I'll go to summary here. Expense ratio. So you have a 0.68 expense ratio for AAJX. And remember, expense ratio is just basically what are you paying as a privilege to be in that fund. That's it. KWEB, what are we looking at here? 0.76. They should all be less than 1% here. And then what was it on MCHI? MCHI is the cheapest of them all at 0.59. So there you go. Well, pretty. They're interesting. Great ways for you to access these markets, that's for sure. All right, I'm going to digress here and go back to listener questions because I can see Mike says, in the ETFs, there were stocks with only numbers. Can you trade those or can you only buy those as part of the ETF? Those are bought as part of an ETF. My guess is they're actually done through derivatives. So they'll probably go to an exchange or an institution and buy some derivative that'll give them that stock. So yeah, it may be traded on a different exchange altogether. You notice that I think there was one that had Samsung, and Samsung, they were getting it from a different exchange. So yes, you wouldn't be able to trade those numbers. Not Bad Whiskey says, aren't ETNs more risky than ETFs? Hell to the yeah, they are. Big difference is this. If I was to tell you that I had a whiskey fund, it would be an ETF. It would be a fund because why? Because I have bottles, I physically have them in my possession, bottles of whiskey, right? So if you bought into the fund, it's backed by what? Actual physical bottles of whiskey. If I call it an exchange-traded fund, it's actually backed by whatever security is that it's tracking. So SPY is an ETF. It's an exchange-traded fund, which means the components of SPY, all 500 plus stocks, are owned physically in a fund, and that's what it's based off of. An ETN would be the equivalent of somebody coming to me and saying, hey, I want to write a contract that says I have some access to that pool over there, but the person who's writing the contract doesn't actually own anything. They just have a contract that says they have access to it. So if the company goes bankrupt that wrote this note, it's an exchange-traded note, if that company goes bankrupt, then you lose everything. There's nothing backing it. There's no underlier. What backs it is the faith of the institution writing the notes. So as we go back here, I want to bring up one, and KWEP. I will tell you, let me bring up KWEP. KWB, I'm sorry. Crane shares. I honestly don't know who Crane shares are. I've never heard of Crane shares up until about a month ago when I started hearing about these different ETFs and exchange traded notes in Asia. So to me, this one is somewhat risky. It's an exchange traded note. It even says an ETF. Okay, if this is an ETF, then they're telling you that they actually hold the shares. So you have something financially backing it, meaning this one here, if it is in fact an ETF, and I would dig to find out if they are, you are backed by those actual securities. Let's see if the other ones are. I personally would recommend staying away from exchange traded notes or other derivative exchange traded products. Okay, so this is also an ETF. All right, I'm surprised. I actually thought, I looked at them earlier, and one of them was actually an exchange traded note. AAXJ. No, these are all ETFs. So these ones actually do own the physical shares. Now, if you recall the three that I've gone through, iShares. We've all heard of iShares. This is a huge fund family. iShares is one of the more established ones out there. What about Crane shares? Not very established. I don't know if they're a big dog in the industry, but that's the Crane shares world for you. So to me, it makes it a little bit diversified and risky. Rachel, it's awesome. Rachel says, "Can I get a whiskey sponsor?" I wish I could get a whiskey sponsor out here. I wish I could get a sponsor. Period. Let's see what else. And there was one more. I'm gonna keep flipping through here. There was one more ETF that I wanted to check out. I don't waste our time anymore. All right, I'll leave it there. So yes, Big Eb, you're absolutely right. The fees associated with them can be dramatically different. Check those out. Try to stay with an ETF, not an ETN or an others ETP. There's ETNs. There's other exchange traded products, right? But ETFs are the ones that actually have a physical backing of whatever security it is that they say that they're holding. I like that. Most of them, the ETNs are going to be off of some form of derivative. Okay, let me go to our next question. So that was the Chinese stock one for Oscar. I love this. It's I am the king, but I like the way you partitioned it. I'm 1, the 2, king 3. First and foremost, it's about you, right? His question is, I'm creating a market catalyst calendar. If you have any upcoming events, please let me know. Well, it depends on what kind you're talking about, catalyst. If you're talking about guests on the program, you can check out the calendar at TraderMerlin.com. I'm sure that's not what you were referencing. I think what you're asking for here is, what are the things that you have on your radar that say, hey, I need to pay attention to this specific day or this specific time, and maybe even seasonality, simply because there could be major market movements because of that announcement. And I have kind of a hierarchy that I do. Number one for me is the Fed. Anytime the Fed meets, you should just probably stop doing what you're doing. As Humpty Hump said in Digital Underground, stop what you're doing because I'm about to ruin. The Fed can ruin almost anything out there, so I would recommend you know when that happens. And I usually tell you when they're going to happen here. But if you go to the Fed's website, they meet 8 times a year. They're telegraph punches. You know when it's happening. But it's crazy how quickly things can move and change based off of the Fed. So number one is you always want to know what the Fed is not going to say, because you really don't know. But you want to know when they meet. And I'll obviously let you guys know every time that happens. Number two is going to be the major economic announcements happening, and that can maybe move a specific market sector, such as crude oil, natural gas. You have inventory numbers, you have retail sales numbers, which could paint a negative light on an industry, which therefore could spread to more negativity there. So to me, that's critical. Next, I would say would be earnings, right? You want to know when earnings are coming out, especially if you're holding individual securities. Because if you're holding an individual security and they report earnings and you don't know, anybody here been blindsided by that? You guys let me know. Has anybody been blindsided by an earnings announcement and you just went, what the hell happened? And you're like, oh, shoot, I held that through earnings. Oh, why did I do that? I'm sure it's happened to more than one of you, and it's an easy thing to fall victim to is getting caught on an earnings announcement. So yes, those are kind of the things that I would be looking at. You could say as a market catalyst would be what President Trump because of his comments, but honestly, you just never know. It could be a tweet at 3 a.m, could be regular market hours, could be positive, could be negative. That's just a wild card now. That's a new normal. I hate using that term, but it is the new normal with regards to market action is what Trump says, right? And it could rip the markets up, could slam them down. We just don't know when or where they're going to happen. So be careful. I generally try to let you know if I see a telegraph thing that says, hey, Trump is going to be speaking at this time, then I will normally let you know. But right now, he's using a lot of these stops as campaign talk, so there's going to be a lot more of these presentations, and so I've kind of downplayed them a little bit, not used them as often. I'm curious for you guys, what catalysts do you like to look for? Are there certain things you like to look for? For example, one of the major things for me is looking at the dollar index, looking at the dollars. I love looking at the dollar index to get a sense as to where the dollar is headed, because historically, it's not happening right now, but historically there was this inverse relationship between the dollar and the market. So as the dollar started to rally up, markets would sell off. So to me, that used to be one of my main indicators, not necessarily a catalyst, but indicators for where the markets may be headed. Curious what you guys are using and what you think might be a catalyst. Okay, what else do I got? Let's go to... All right, Tom, this is I think I could do a much better show if I just dedicated a lot of time to this one. It's really kind of complex and probably would be beneficial to have a CPA or somebody who's versed in taxation on this one, because I don't think the tax numbers are going to be that dramatically different to seriously impact you. Tom says, I'd like some thoughts on strategies for potential election outcomes. I'm considering taking money out of an IRA this year if the higher tax candidate wins. The money would be used to pay debts for some of the next year's expenses. If the low tax candidate wins, then I will just leave the money in the IRA. Thoughts? We recently hit 59.5, so I can withdraw without penalty. Here's my thinking on it. I wouldn't try to be proactive here. I wouldn't really worry about it too much, and here's why. Once whatever candidate is elected or re-elected, it's not like you hit a button and instantly the tax code changes, right? You'll be hearing about it, so as that gets closer and you're hearing about, hey, they're going to start raising this and changing this and this is proposed, then you can do that. I wouldn't necessarily feel the need to be proactive and say, oh, well, if so-and-so wins, that means taxes are going to skyrocket. I'm going to pull it out right now. I would wait for that action to happen. That way you're not forced to pull money out when you might not want to. So that would be my 2 cents on it. Yeah, I don't see any real need to do so. I think, especially when you're 59 and a half and you're getting to that stage of pulling money out for retirement, it's more significant than just saying, oh, well, this president or this administration is going to make higher taxes. There are a lot of different things that you can do yourself with that money to lower taxes that are going to be paid on it. By how you pull it out, maybe you do things like annuities and different asset categories that may not give you as much of a tax hit. That's way beyond my knowledge and expertise. Is exactly what I know. Some of the strategies out there, certainly when you talk about Social Security, when you pull that out. So I would be more concerned about the whole nest egg as a whole and how you strategically pull it out, not just because of an administration taxation, but what could I put that money in if I did pull it out that might give me some tax benefits, maybe even tax savings, so I could pull more out of other accounts and not be taxed, if that makes sense. I know it's kind of convoluted and confusing. I feel like I'd be much better if we had a tax pro on the program. So I actually reached out to Michael Atias of OTA Tax Pros. I'll see if I can get him on the program, and maybe we can get a little bit deeper into that one, Tom, because it is a good thing to think about. I just don't think you need to be that proactive right now. I think that if it does happen and you start to hear about it, and they say, oh yeah, we're going to raise taxes on distributions or raise the tax code brackets, then all right, then start to pull it out there, but I wouldn't worry about it right now. You still got a little bit of time here, certainly before the elections happen, and then after the elections happen, those punches will be telegraphed. They'll be coming from a long ways away, and you'll be able to see them. Okay. Yeah, Big F says, as long as the Fed stays in the game big time, it might not matter a lot who wins the election. True. Other things could happen due to different administrations, but yes, it is certainly a benefit having the Fed backing this market so aggressively. All right, I didn't change the font on this one. I've been trying to get all these questions in. There's so many of them. Taylor says, what earnings reports are you most interested in which may move the markets potentially to the downside? Well, look, next week is a very, very interesting time. And unfortunately for my put position, people have been asking me, am I still in that put position? Yes, I am still in the put position. My goal was to exit it by next Friday. We'll see how the week transpires. If I get an aggressive move to the downside at the end of next week, I'll probably hold it for another week or two. But as of next Friday, I will have 60 days to expiration. That's generally my rule when I'm in a position like this. So unfortunately, it'll probably be a significant loss. It's all right. I had some significant gains early in the year, so we're still ahead on the year, which is great. But it was really based off of this thought that Q2 earnings were going to be really bad. And judging by the reactions of states like Florida and Texas and California, even though we're being hard hit by COVID, the number of deaths are starting to drop, even though the number of cases are rising. That's because of testing. If you guys watched the interview I did with Josh Lilquist, you can go to Twitter. I posted on there. He's actually got on YouTube as well. He does a podcast, and he asked me about this one, and I said, part of me feels like this. I'm going to ask every single one of you the same question I asked Josh. If you go back 365 days, all right, it's July 10th, 2019, and you start developing a cough. And you got a little bit of a fever, you got some night sweats, and you're, you kind of feel generally achy and don't feel good. What do you do? I'm asking all of you guys right now, what do you do? I'm going to go back 365 days, a year ago, before all this COVID BS happened. And you had those symptoms. You had night sweats, you had a little bit of a fever, you weren't feeling really good, you just felt, oh God, I just want to stay in bed, and drink a lot of fluids. What do you do? How many of you went to the doctor? Right? My guess is that the vast majority of you would do the exact same thing that I did, because I was sick as a dog in December. And in December, I was coughing for 2 weeks straight. Thank goodness I didn't start the show then. But I was coughing for 2 weeks straight. I felt like crap. I didn't have a fever, but I had night sweats and everything. What did I do? I just stayed home. I did not go to the doctor. So now, as soon as we get these symptoms, everyone's doing what? Going to the doctor. Whereas a year ago, you guys all would have just stayed home, called in sick because you had the flu. Yeah, Big Eb says warm whiskey and Mucinex. Exactly. You wouldn't have gone to the doctor. You drink more whiskey. Yeah. See, Taylor would have gone to the doctor. I would not, because I feel like if I go to the doctor, I'm going to catch something while I'm there. Gemini, stay home, rest, take meds. 100%. But now we are all on this fear thing that as soon as you if I have a fever, it's like, oh my God, I got COVID. Oh my God, I got to go to the doctor. Now all of a sudden, that's the different market dynamic. And I question how many of us a year ago, how many of us 2 years ago or 3 years ago had COVID? It's just they put a label on it and defined it in December and said, oh, this is COVID. But nobody got checked two years ago. Nobody, not one got checked for COVID because we didn't know what it was. So I don't know. I think it's a little bit blown out of proportion. Tom says, when I feel sick, I go for a run. And still what? Yes, but now you have to wear a mask. It's interesting. Taylor, you're not a wimp, buddy. Yeah, it will heal itself. Look, this might be something more extreme, but I'm a little bit wary because I feel like this is just going to end up blowing over and as to a major overreaction on our part. But I was talking with Josh about this, and if you look at the average life expectancy in the U.S., it's 78 years old. And if you look at the vast majority of deaths, over 60% of the deaths that have happened have all been from 78 and above. So, just calling a spade here. All right, so Taylor, let's go back to the earnings thing. Taylor wants to know about earnings. The reason I put that position on so heavily is I really thought that Q2 was going to be a result of mass quarantine, and all of a sudden things would start to slide. So you asked specifically, what companies I'm looking at. Look, there's a lot. You have on Monday, or actually no, not Monday. On Tuesday, you have Citibank, Wells Fargo, JP Morgan. All right, those are huge names. You also have Delta Airlines. I'm curious to see what happens with Delta Airlines if you got puts on them. You might do rather well out there, although that may be the expectation may be built into Delta. You jump to Wednesday, you got IBM, you have Goldman Sachs, you have eBay, you've got Progressive Insurance. It's not one specific company. I'm looking to see how different sectors are going to be impacted. Financials are going to be number one here, right? They're coming out on Tuesday to start with big guns. JP Morgan, Wells Fargo, and Citigroup, and then Bank of America and BlackRock are on the next day. I think BlackRock's on Wednesday. Thursday, you got Johnson & Johnson, Netflix, Bank of America, Morgan Stanley, and Honeywell. These are all multi-billion-dollar corporations that have massive pull within their sectors. So, to me, starting on Tuesday, Wednesday, and Thursday, that's the beginning of earnings season. That's when we'll really see how the impacts of COVID hit our markets in that April, May, June period. Certainly some sectors will perform very well. I think right now it's being priced in that Amazon and Netflix and Tesla are going to have monster quarters. I think Amazon will. When we talked about this as soon as coronavirus hit, I think when I was in the hazmat suit with Larry Jacobson, I was saying eBay is going to do great. Well, they report earnings on Wednesday as well, and their stock has gone ballistic, absolutely straight up. So I'm waiting for the sense that maybe earnings aren't as great and people got a bit overzealous and things will turn a little bit. That's what I was hoping for this position. I actually thought it would start to turn earlier, but as you see, the markets have not cooperated with me. So Taylor, It's not a specific company I'm looking for. It's how does a sector start to react. I think we all are pretty much certain that the airlines and cruise ships are still going to be just decimated. Retailers, Ross Stores, Costco, Costco actually okay, but Ross Stores, TJ Maxx, Kohl's. I mean, you may as well be playing taps in the background. They're going down, man. And companies are going to start filing for bankruptcy more and more and more, especially if the shutdowns like is happening in Florida, Texas. And by the way, big shout out to Mark Patrick. Mark Patrick, I used to work with the guy, great guy, but I love when people get unbelievably arrogant. And he's just saying, look, we don't need to wear masks in Arizona. This whole COVID thing is an absolute scam. We don't even have cases of coronavirus in Arizona. We're the lowest in the country. It's like, who's spiking now, buddy? I'm calling you on that one, Mark. Gotta be careful. Careful. Don't boast about anything. It's kind of like trades, right? You never boast about that winning trade. Never boast how well you're doing because all of a sudden the market's like, excuse me? Were you saying something? Here's a big dash of COVID for you. Done. Okay. Fink says, blame the Fed for your puts. Fink, the only person that I should blame, point the finger at, or have any issue with my put trade not working is me. That's it, 100%. You can't point the finger at anybody else. The only person who would be able to fix it would be me. All right, what else do I got here? There were two more that came through. I'm going to answer this one from Michael. Michael asked us on YouTube channel, and I may as well get to it because it's a decent one. He says, for my long-term portfolio, where I do not have any stops. Okay. When should I sell a stock? Is there a rule that stock goes up 20%? You should sell half of it? I'm not sure if I agree with that. Are there any rules or psychology that works here? Look, if you are a student of Online Trading Academy, and really anybody who is a pupil or disciple of Online Trading Academy that has their own education right now, it's very simple. You never enter into a trade without three variables. Your entry price, your stop loss, which it's in that order, guys. It's not your entry, then your target and stop loss. It's entry, stop loss, and target. You want to make sure that you know where you're buying in because that is the anchor for everything, right? That's the anchor for your profit and your stop loss. Once you put that stop loss in, you know exactly how much you're risking, and now you can adjust your share size to make that trade work for you. Now, your target. You asked, if it moves up 20%, do I take 50% off the table? If it hits your target, yes. Right? That's why you have a target in the first place. Now, there's no set rule. This is why trading works on so many different levels because everybody does things differently. I know there's some people in this room right now who would take all their money off the table once they hit their target. There's some people who would take half off and let the second half run. There's others that might implement a different scaling strategy once that happens. The bottom line here, Michael, is you need to set a rule for yourself. And that's why we talk about journaling and having a log of your trade so you kind of keep track of what you're doing. For example, let's say that you bought the stock at $10, your stop loss was $9, so you're risking $1, and your target was 14. So you're trying to make $4 for every $1 you're risking, a 4-to-1 reward to risk ratio. Great. So all of a sudden it hits 14. It did exactly what you thought it was going to do. In theory, you should just close that trade out, take your $4 worth of profit, and call it a day and be happy with it. The little devil on my shoulder would say, hey man, it's really moving. It could go to 16, 18, 20. It could be $50 here soon. Great. If your mind thinks like that, like mine does, then take half off, lock in those profits, keep that second half running, and move that stop loss up to right underneath that second portion. So if it does go down, it goes down a little bit and you're fine. I'm a fan of letting those winners run and taking half off, but there is no right way to do it. There's the way that works for you. Tell you what, guys, you're going to see me wig out over here in a second. I have, for some reason, mosquitoes come into this room in my house, and they just sit here and prey on my legs. Right now, my legs look like those old Fred Flintstone bats with all the knots on it from all these mosquitoes, and they're just absolutely eating my legs right now. So if you see me wig out and start cursing and smacking things, it's mosquitoes, I'm telling you. I actually bought a bug light for the office. It's so weird. You think I live in Florida with all the mosquitoes going around here. This is what happens when you put passion fruit vines on your property, and they're all around. I have like this 8-foot wall of passion fruits that goes around my property, and mosquitoes really, really like it. Anyway, Michael, that's my 2 cents on your targets. Jeff, I'm not going to be able to get to all these, Jeff, because I looked at the clock and we were just about out of time. I'm going to just briefly talk about these, and I think I'm going to actually make this the show on Monday. It's more about formations. I'll read these, Jeff, and you're gonna have to just join me on Monday's show for this one because I gotta look. I'm looking at the clock here, and I got stuff I gotta take care of right after the show. So, candle formations. Can you review and take trades off of a hammer and spinning tops? Sure. We'll talk about spinning tops and hammers and kind of the setups that I look for on Monday's show. And then I think there was one more here from Jeff, which talks about breakout trades. So I'll do more of a focus show on breakouts and candles and patterns on Monday. I think that'll probably be best for everybody, just especially from a time constraint perspective, because I looked at the clock right now and I got 15 minutes left. So let's see. What do I got from viewers? Can you show us levels where you're looking for your short puts? Well, there's not really any levels. I was just expecting the market to sell off. My expectation was that I was going to close out this short position on SPY this not today, but next Friday was the initial plan. So it wasn't based off any levels. I bought deep out of the money puts because they were real cheap, and the expectation was we'd have a sharp spike down off of continued fear of COVID. But now all of a sudden that fear is kind of subsiding. People aren't dying in the numbers that was expected. Cases are spiking, but okay, fine. If cases spike and people don't die, then great. Let's all get COVID and call it a day and be done with it. Right? Move on. Let's take the masks off and go. What else we got? Can you take a look at TTWO? All right. I'm not going to look at financials on this one, Gemini, just because I don't have time. And I'm not the big financial guy, but I'm a pure technical dude. Okay. Take Two Interactive. Looking great, by the way. A bit overextended. If you look at... let me just read the question here for everybody from Gemini. Can you take a look at TTWO and tell me what you think of the company in general, statistics, financials, etc.? Don't really know much about the company. I stopped really researching a ton in the companies, to be honest. What is noteworthy here is what has happened. Okay, you look at the move from early 2019, back in February of 2019, through August of 2019, and I'm going to actually put a percentage tool on here so you can see how much it moved. 60% gain. All right, if you look at the lows here, we're in a very different market, right? We are in a market now that's driven by fear, driven by COVID. It's up 53% in a shorter period of time. I believe that Take Two, technically, is way overextended. If I was to pull up Bollinger Bands here, you'd see a really crazy expansion on the Bollinger Bands. I'll see if I can add those on. I might even have them. There you go. Bear with me. There's a lot of lines. I'll take some of them off here so it doesn't drive you nuts. We'll take off the moving averages. And there you go. So you notice that this thing is just screaming to the upside. It's gone parabolic, especially over the past 2 weeks. You are now looking at a point where Take Two is closed outside of its Bollinger Band for the second straight day. To me, this is, trend-wise, sure, it looks great. 20-period moving average has been moving up almost nonstop since late March, but it is overextended right now, and I would be waiting for a pullback if you're looking to go long, and I'd actually be waiting for a shorting opportunity here if you had one. Let me go back to a weekly and see if you're coming. Yeah, we're all-time highs on this bad boy, so no sense in even looking for a short opportunity. There's your monthly. It's funny, it's overbought on every analysis. It's overbought on the monthly. It's overbought on the weekly. It's overbought on the daily. And probably overbought on the hourly as well. Mike, okay, fine. Mike, you're killing me. But you're right, I owe you. Mike says, can you talk about the lack of stock splits? And you actually sent a nice email about this one. You really aren't seeing stock splits anymore. And here's my 2 cents on it. I don't have any factual data as to why it's happening, but I think this is the phenomenon in here, in why it is occurring. Back in the late 90s, when a stock got really expensive, there was this belief system that, you know what, the average investor is not going to buy a $500 stock, but they'll buy a $50 stock, or better yet, they'll load up on a $5 stock. So you would see reverse splits to keep prices cheap and make them look appealing, because a lot of times people will look at I don't know, let's bring up a stock here. I'm trying to find, it's funny, a lot of the companies that I used to trade are gone. And let's go to, everything's expensive right now, I'll tell you that. I'm trying to bring up a cheap security, but like everything is expensive. Let's go AMAT. How about Applied Materials? It's not cheap, but okay, AMAT is trading at, as you can see here, $62. Right? So a lot of people are gonna look at that and say, hey, $62. Oh, that's kind of expensive. And then you bring up something like Amazon, and you go, oh, you're trading at $3,200. Well, I can't afford that, so I'm gonna buy a cheaper stock. That's the viewpoint of retail investors. But now, because as Big points out here, you have fractional shares. So you can go buy, through different companies, a fraction of Amazon. And I think that that is helping here. Obviously, there's cost for them to do splits, right? There's administration stuff. There's legal fees. It does cost money to do splits. It just keeps their share price attractive by keeping it low. I think that that dynamic has kind of changed recently, right? It's like, oh, I've got a bigger share price. It's almost prestige when people see Amazon at $3,200. You know, I believe that that's why you're not seeing it anymore. Because A, you have the fractional shares where people now don't have to worry so much about the actual price of the security. But also, it's, you know, it's like, look at me. I'm at $3,200. I mean, Netflix. I mean, come on, Netflix? I mean, it's funny because I was bad-mouthing Netflix for a long time. It's at $548 and ripping today. Their earnings is next week, by the way, so be careful with that one. But yeah, I think that that's why, Mike. I think you're seeing it because a lack of stock splits because there's not the need anymore because you're not pricing people out of the market anymore, right? Amazon at $3,200, great. I'll buy 1/10 of a share, $320. Fine, I can do that. Or I'll buy 1/100th of a share and it's going to cost me $320. That's it. Did Tesla do it again? I didn't even look at Tesla today. Oh yeah. Unbelievable. It's interesting, these, oh, sorry, I'm not even showing you guys the charts. There's your Tesla, which has been really overbought. I mean, this thing is really, really overextended. And remember the analogy I talked about, guys, with like a rubber band. You're looking at how quickly this thing is pulled away from this middle line here that I've got the little squares on. That's your 20-period moving average. Look how overextended it is. When that happens, when you get something so overextended, normally it comes ripping back down. It just hasn't happened yet, which, you know, leaves me scratching my head because it's not just Tesla, it's Amazon. I mean, Amazon has been up above that Bollinger Band every day for, what, a week and a half? eBay's been on a nice move lately. Same with eBay. I mean, these things are all really, 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 really overbought right now. So I'd be careful with whatever investments you're making simply because I think a lot of it is overbought. Okay, there you go, Mike. I want to make sure I got that question. Why are experts always surprised on earnings and jobs reports? Is there any service that rates experts? You know what? There used to be somebody that came out and I don't know if they rate experts, but they looked at the performance of different fund managers. I know that was one way to rate an expert, but yeah, I don't know. I hate the word expert. You got a case of DEET. I should get a case of DEET. I actually bought a bug light for inside and outside, and I have these little tennis rackets that are coming that kill them because I can't catch those little buggers. Anyway. All right, let me go to wrap up here and show you guys kind of what's happening for Monday. Obviously, today's markets were... If you looked at what happened in the pre-market, like last night, right around midnight, markets were tanking. It was great. We're down almost 1%. I was thinking, oh, here we go. Nice sell-off. Not only did we erase all those gains, we finished right near market highs. Great resilience. I mean, to me, it does smell like you're going to see more upside here, even though as ridiculous as it sounds. Here's the markets for today. Notice the S&P 500 this entire week has just been sideways. You had 5 days, green candle, red candle, green candle, red candle, green candle, and notice the Bollinger Bands are no longer really wide. They're kind of compressing. Generally, when you see that, it's a sign that things might rip in the direction of the previous trend, which would be up here. So kind of gotta be a little careful here. I feel, well, I'm curious to see what Tilly has to say about this, the market levels here. You know, we've got some right around that 3,200 mark, which will be a challenge for sure. That could easily be hit next week. Easily. I mean, the way that things have been going. But really kind of sideways action. But look at the intraday. I'll bring up a 15-minute time frame of the ES today so you guys can check that out. Look at what happened last night. I'll get these Bollinger Bands out of here. They're clogging up my screen. Right? This nice sell right here. This sell-off last night. It just kept drifting and drifting and drifting. I was like, oh, we erased all of those gains from the prior day. All of it. And then just ripped out of there. So obviously people going into the weekend with expectations that maybe earnings are going to be great over the weekend or next week, building the position. I don't know, but it just keeps on trucking to the upside. All right. GD says time to adjust the Bollinger Band settings. I don't. You know, you could adjust from 2 standard deviations to 3, but why? Remember, the vast majority of people, systems, algorithms are all using that 2 standard deviations. So I keep that there unless I'm looking at some long-term investment stuff. I have a modification that I like to use. Okay, let me go to your economic calendar for Monday. Earnings-wise, there's nothing to speak of for Monday, so I'm not even going to go down that path. But here's what you got cooking for Monday the 13th. a lot of announcements really going on. Europe, why does this look old? I didn't swap it up. You such a yes, I'm mouthing myself over here because I didn't swap out this image for you. At least I don't think I did. I'm going to see if I can get this one for you because I was so busy. I didn't get a chance to do that. And for some reason, no, I don't have it. Never mind. I got the wrong one for you. Let me bring it up just so I can show you on the economic calendar then. We'll make it easy. I'll go to Forex Factory here. That's one easy place to get it. And I'll show you what's happening for Monday. It really is a busy day on Monday. All right, we'll go to the 13th. You know, it's not for the U.S., right? It's mainly everybody else. So British pound, if you're trading the cable, anything pound-denominated pairs, you have a lot of stuff happening. GDP numbers obviously are going to be rather important for the British pound. A lot of production numbers. Other than that, not a ton for the other markets. You see, U.S., we just have FOMC member Williams speaking and federal budget balance. So it's quiet. Really, to me, the action and the fireworks starts to pick up on Tuesday when we have some earnings, both before market and after market. So there'll be a lot of stuff happening on Tuesday. All right, guys, that's going to do it for me. I'm exhausted, and I got to go kill some mosquitoes. They drive me crazy. I hope that you have a great weekend. Be safe. Have fun out there. If you like today's show, do me a favor. Click the thumbs up button. That helps me. Also, the subscribe and the little bell, of course, doing a little marketing. If you guys have ideas on how to expand the show or get more viewers and make it bigger, that's the goal for me, let me know. Send it on in at TraderMerlin.com. I'll even put up throw some fire up there for you so you can see. You can go to TraderMerlin.com and send them in there. Questions about shows or topics you want covered, put those down below the video on the YouTube channel, and I'll answer all those on Monday's show. Until then, happy trading, everybody. I'll see you Monday.